Hello, everybody, and welcome to the Mortgage Broker Builder Show with your host, John Jerkovich.
Well, welcome to this week's Mortgage Broker Builder Show, the MMB show. And what we wanted to do is go out, and we are here to do a couple of things. We're in the B2B business. We help bankers become better. We help bankers become brokers, and brokers become better. Our mission is to guide and to help you along the way to get a ton of really great information that's pertinent to see that your business doesn't just stay alive today, but actually thrives. And we've got a super exciting guest here this week. And I'm going to give a little backstory as to how I met this gentleman. But we've got Thomas Morgan with the Mortgage Manuals. And I'm going to walk you guys through kind of how I came to meet Thomas. And we'll let you guys kind of pick it up from there. But I don't know, 6-8 months ago, I had somebody reach out to me and they're like, John, I've been doing mini core for quite a while. We want to go out and become Fannie Freddie. How do I do that? I was like, crap, I don't really know. Right. I've always just worked at companies that did that. Like either I'm in the startup phase or well after that's done. And so I started poking around and one name kept coming up. Hey, you should reach out to this guy. You should reach out to this guy. Well, that guy happened to be Thomas Morgan, reached out to him, found out not only does he do that, but does all kinds of other really cool things and has built what I think is one of the cooler compliance places to be able to go out there and not just get compliance information, but just a wealth of knowledge. So as we onboard brokers and bring them through, we make an introduction over there and he becomes their compliance person or their compliance helper or fractional compliance chief officer, whatever you want to call them. But it's just been great and have learned a ton from him already and wanted to share with you guys all the things that he does. So welcome to the show, Thomas.
Hey, thanks for the welcome, John. That was a very, very nice introduction. And it's sad to find out that I am in fact a best kept secret, but that happens again and again. And I think part of that is by design. We really try to build relationships with people who are in positions like you. You're helping people start up, grow businesses, make their businesses run better, and that's really our MO. So we talk about compliance, and that's sort of where you brought me on for this meeting, but we talk about compliance, but it really is from the perspective of how you can run your business better. And that's when you talk about workflows, that's really what we're talking about is things that you can do so you're not doing things again and again repetitively that are incorrect. Fixing problems after the fact is a huge problem. You talk about getting an examination, say, for instance, from a state regulator after the fact, and you've been doing things a little bit sideways, and the kind of time that you have to spend and the lost productivity involved with going back afterwards and trying to clean up files and trying to get your policies and procedures in order when you could have done it initially and achieved some other benefits from doing it at the beginning, such as smoother operations, better understanding. And what we like to talk a lot about is how originating firms, companies, mortgage loan originators themselves, company principals can help their own marketing efforts by talking about compliance with their customers and their referral sources. How do we keep your information secure? How do we make sure we deliver excellent service by having great, well put together loan files so that the underwriters and lenders that we do business with really come to respect us in terms of our packaging so that we know we're not going to have a problem with a regulator down the line. And so there are a lot of questions that we get that we answer. And that's why I sort of like to say our tagline is we're here to help. And so rather than saying strictly, this is what we do, I say, tell me what it is that you're struggling with and let's see how we can help you with that. And so that's really been the key to how we've built our products and services. And so as the business has evolved, you mentioned, helping mortgage bankers become mortgage bankers. helping mortgage originators transition to mortgage banking or mortgage brokers. That's a really pertinent conversation. We're seeing a lot of it right now. Companies who are doing exactly what you're doing, which is saying an originator, say for instance, at a mortgage company has gotten tired of the lack of flexibility that comes with the structure of a mortgage bank or a bank itself, and also in the wake of smaller loan volumes, right? You've got people who are looking to see, can I increase my margin somehow? And these are typically the main reasons we see for people saying, I'm going to leave the cozy nest of my mortgage banker job or my banking job and go out and become a mortgage broker. And really, it's the sweet spot for the industry right now. And if you think about it, great training wheel situation. You're able to take your contacts, which really you as a company or as a mortgage originator, that's your franchise, right? Your existing book of business. Those people take your franchise and build it for yourself, not for the company that you work for, not for your employer. And so that sometimes we find the biggest impediment to that is people think, well, and John and I were talking about this earlier, people think, well, man, I've looked at the back office at some of these companies I worked for, and the compliance, the delivery, the QC, all that stuff is just daunting to me. Secondary marketing. Wow. I don't think I can do it. I'm just going to stay here and continue to work for this company. And that's what we want to help people understand, that demystifying some of this. And that's, I think, why we're here today, is just sort of to demystify the process of compliance, the process of back office operations, and allow you, mortgage broker, entrepreneur, mortgage banker, entrepreneur, mortgage loan originator who wants to open up a de novo company, how you can do that, improve your profitability, improve your operations, and really have the equity and be truly an entrepreneur. And so with that, I didn't know if John, you wanted to focus the conversation a little bit more, or
yeah, I would love to. So what we'll kind of do here is I've got some questions written down of some different things. And one thing that Thomas kind of brought up there that I just want to touch on really quickly, and I see it a lot, just because somebody's running a lot of ads on YouTube or Instagram does not make them an authority. So somebody like Thomas is just sitting out there. They're already running a book of business referrals. People are just coming through them. You may never know about them if your source of information is X or Instagram or whatever you see there. So just kind of be in mind with just pay attention to that. A lot of pretenders out there.
I'm making a note myself to improve my social media marketing, John. Can you help me with that?
Every single person should. But I wanted to just kind of take a step back, right? So Thomas is talking about a lot of things, but just wanted to quickly, 2 minutes or less. I know you've been doing this a really long time. What was your journey to become? How did you end up in this space? I'm sure nobody sits down one day and says, oh, I'd like to be a mortgage compliance guy with a website that talks about no 4-year-old does that. So how did you get there? I think you started this back 97, late 90s when you kind of began down this path.
Yeah. My history in the mortgage business, I started in the 80s. Obviously, I worked for a multifamily company. I got into closing. And what was great about being in closing was that you're at the back end of the mortgage process and you see all the problems. Right? That's where all the bottlenecks and all the issues that could have been addressed earlier in the process come to a head. And so I made a promise to myself that when I got out of operations and into sales, that I wouldn't be that kind of loan officer. I would be the guy who would know, how to run things from beginning to end so that we wouldn't have some of these problems, looking ahead in the process, not being reactive. And I did that primarily through a training program and by documenting policies and procedures for people who worked for me. As I opened my own mortgage company, I did that. And so suddenly people would hear about this product, my training or my manuals or the pre-application process, and people would call me and say, "Hey, could you send me a copy of your training book? Could you send me a copy of your manual? Could you?" And I was like, just giving them out. I probably gave out 200 copies of these things, and I thought to myself, well, maybe this was an entrepreneurial moment for me. Maybe I could sell these, and maybe that could be my business. In 1996, if you recall, that was a period of time when Alan Greenspan had been raising interest rates literally at every Federal Reserve meeting. So 92 was sort of an ending of a period like where we've been through, a period of refinancing, booming business. 92 rates started rising. 93 rising, 94 rising, 95 rising, 96. I mean, come on. And I put a little ad on a web page, and then I did a little mailer saying, here, you could buy these products. And I made a little clip out coupon. One day I came home and there were like 4 or 5 of these little envelopes with little checks in them with my little coupon in them. And I was like, what a country. I love this country. And that was when this company was born, 1996. I started doing training and development for small builders and mortgage companies. With the dot-com bust, we had some other hiccups, but since 1996, we've been working on helping other companies run better. And
Nice.
the focus has been compliance, because that's the piece that's sort of like a third rail nobody wants to touch. And you're right. If I go to a cocktail party and somebody asks me what I do, I say, well, I do Dodd-Frank compliance. And, people are like, hey, that's your story. Tell
It's
it
happening
again.
to me already.
But so what I like to say, and my wife actually coined this phrase because she had to listen to my conversations over and over again. So recently, a couple of years back, she's like, you're the Ray Donovan of compliance. So people come to me, they have a problem, and I get to fix it for them. So I'm a fixer. And so one of my taglines, Ray Donovan of compliance, and the other one of my taglines is, and this is particularly true for your audience today, is that our clients are not too big to fail. They're too small to comply. So you don't have a compliance department. Let us help you with that. So that's sort of the genesis of that. But thanks for asking that question, John. And I think, you and I share a lot of visions in terms of the entrepreneurial spirit of our customers. That's why I came from that background. That's why I really love this business, is because we're all entrepreneurs.
And and just so you guys know, like, we'll get you some info as far as like where you can go to their website. There is just a wealth of knowledge. So where it started from there today has kind of just been this iteration of like a snowball effect, to where there is thousands of documents, thousands of things that you can go and get there, things like social media policies. So there's a bunch, but so kind of like we fast forward, we're here today, you're out there, you're doing compliance, helping people grow their businesses. You're the Ray Donovan, right? I'm older. I like to think of the wolf from the wolf from Pulp Fiction, right? Like that's it's not Ray Donovan. He's the wolf. He comes in when there's a problem. So with that kind of like that wolf or that fixer mentality, what's the biggest mistake that you see people making over and over? And I know what it is, but I'm going to kind of cue it up here like a softball. What's the biggest mistake, if you had to pinpoint one thing that's easy to fix, that you see?
Okay, well, and your system does some of this for clients, but if you're a new company, if you're getting into the business, running your own company, I always say, if you do just one thing, is to completely and accurately post-close your loan files. We see this over and over and over again. People get into their business, they get busy, they get the message from the wholesalers. Yeah, don't worry about compliance, don't worry about your loan files. If you need something, we'll get it to you. So just go out and get those loans in, because that's what the wholesalers of the world want. They want the loans, and they're there to help you build your business, but they pick up from the period of time where you stop as a broker or as a lender. In other words, you've submitted the loan to them. They're taking all the loan level compliance, but there's a period of time before that where you're responsible for compliance. A. B. When the loan closes, you're responsible for retaining records of that transaction. And imagine that you've been in business for a year and a half to 2 years, and you've closed a couple hundred loans, and you weren't really sure what was going into those files. And you get a notice from a regulator, and this happens in every state. We want to see 50 loan files. We want to see your closed loans. We want to see your denied loans. We want to see your withdrawn loans. And I just was talking to a customer this morning in Louisiana. Not every state takes a look at the denied, withdrawn, canceled loan files, but Louisiana does, and a lot of other states do. And he got that note, and they were looking for 3 years of loan files. And his entire 6-page audit report was a list of findings of documents which were missing on each of those loan files. And he had followed the advice of his lenders. Don't worry. When you get an audit, just ask us and we'll send you the loan files. But they were missing broker-specific disclosures, lender-specific disclosures. And this is what I would say to you. It's just if you do one thing, is post-close your loan files. And how easy is it? Well, you're new or you're existing business, but you're trying to be more systematic. That file closes. This is a great day, right? You know, you're just new to the business. Maybe it's your first loan file that you finally closed. And it's a reason for celebration. Yes, you should go out and get more loans. But before you deposit that check, before you bank that check, go through and reconcile that loan file. And it's actually a pretty easy process. John, do you mind if I share my screen?
No, and I just want to add one thing here. So I have seen companies that go through, and it's been, right, they're 2 years in the business. They get their first audit, and it literally takes them weeks to go back and rebuild the file. So there's an old saying that an ounce of prevention is worth a pound of cure. It's not that hard to do this right up front, to have a policy that every time, 100% of the time, these are the things that we do. Thomas is going to share a checklist, but just think this is a mission critical thing. If you're a brand new broker, and I don't care if you're doing it in Excel, I don't care where you're doing it. There are things that you're going to need at some point in the future. Thomas is going to share a list, but this is super important. Closing the loan is only the beginning as a broker.
Well, and to your point, if you think about that, that was the message I was going to communicate about this client who I talked to this morning. He literally had spent 4 weeks gathering the information that he needed for his examination. And that's 4 weeks. He's not going out and originating new business. So forget the cost of the examination, forget the cost of doing business, the hard cost, the lost time, right? That's our most valuable asset, is our time. Not only that, but now, because if it was the sloppy record keeping, the regulator has looked at his rating, and instead of coming back in 4 years to review him, they're coming back again next year to make sure that the situation has improved. So you just got yourself on the regulator's radar in a way that you don't want to be. And so once again, a lot of good reasons: time value of money, and the fact that you don't want to have more regulatory scrutiny than you can absolutely avoid. And this is a simple way of avoiding it. You put your files together in a good way. And so what I'm going to do is pop up this simple checklist. Now I know, and some of the feedback I get, and I'll just point this out because some of the feedback I get is that we always we're dealing with a digital environment now, and this seems like this is a paper process, right? Well, it does help if you can do it on paper, but you can also digitize this. The point of this is just to make sure you're doing a number of things at the time that you close the loan. So I don't know. Can you see my screen now? Do you see the document that says post-closing audit preparation compliance checklist?
Yep.
Okay. So this is what I'm going to share with you. And by the way, if you want to email me and send me a copy, send me a request, I'm happy to send you a copy of this particular document. I believe it's so important. It's not a QC process, it's a QC checklist. But what we're trying to do here is ensure that you are keeping the information that you have on the file, and that you're correcting the loan amount that you have. So this is a very simple step. But one of the other citations we see frequently is that their NMLS call reporting is wrong. They've got the loan amounts wrong because somewhere between the time that you took the loan and submitted it and uploaded it into the system and the lender closed it, the loan amount changed. So now if you haven't gone back and changed the loan amount in your LOS, you're going to have a discrepancy in your NMLS call report finding. Yeah, so make sure you document the copies of the check, any fees that you've had received. That one of the reasons that's super important is if you collect a fee and don't credit back the borrower what they've paid, that they can fine you for that. But here's just a simple idea. So these are the things that you want to keep in file. So if you're acting as a broker and a lender, there are some things that you don't need as a broker and some things that you don't need as a lender. But just a simple process of going through and keeping all of the things that you need in this file, storing it in a shared drive or a Google Drive or some other secure storage location. These are the ones that apply to you. And I'll bring you particularly to, and this is the one that we get the most pushback on, is the broker agreement, because a lot of people say, oh, listen, I have the lender, whether it's Rocket or UWM or whoever you're using, Plaza, Sierra, all the different lenders that are out there, they say that, they're preparing a broker agreement for you. But the truth is that we see this missing most often from of all of the documents. So making sure that you have these forms in the file, and then just close the loan, close the file, and go on to the next loan. That's really the most important message I can give to you is be systematic about it. And rather than, I could go through the whole checklist with you, but John has told me that that's a good way to lose customers, going through granular details. So just giving you the big picture is you do one thing, post-close the loan file, have a tool to do that so it's consistent. Make sure you get your broker agreement signed. Make sure you change your loan amounts so your call reporting is good. Does that make sense?
That makes perfect sense. And we will include a link here in our show notes. So we will get a link or a download, some way for you to be able to get that access to that document. And all of the LOSs today, all of those systems out there, all of your tech, most of them now have some form of workflow automation that you can do. At the end, I would make sure that this happens 100% of the time on 100% of the files, that there is some internal control that says, these are the things we do to close out the file. And then even if you mess something up, what I've learned about auditors, if you made an attempt to do it right, even if you mess up, they'll give you a mulligan. If you just have nothing at all and you're just like, oh, I'll just figure it out later, they will come down, like they want to see that you tried. So even if your policy, like if you have a policy and even it's wrong, and then some other just really key dates, make sure that the insurance information's in there correct, dates of renewals, just so many things. We'll get you the list. Important to close out your files. Do it right the first time. It will save you a bunch on the next. So awesome stuff there. The next thing that I got quite a few questions on, and people had sent emails over with, hey, I've got questions on this, on that. Let's take a look at, we get a lot of questions on compensation, borrower paid, lender paid, kind of all of the spectrum there. I know that it's kind of a clown show in that everybody will tell you something different, and it's different by state. So what are kind of like some of your thoughts on there? And I know it's a question you get all the time. And I also know that this is something that often people reach out to me, really they're shopping an answer to try and find somebody that gives them the answer they want, not the answer that's right. And they'll just keep calling till they get that, which is fine. I did it with underwriters for years. So tell me a little bit about your thoughts on comp.
That is like, and it is the most common question we get when people are trying to do something. I mean, look, it's a competitive environment out there, man. And we're trying to recruit loan officers, and there's all kinds of different schemes people have, and 100% commission, and pay me, you just pay me $500 a month and you get everything, you keep everything. And, you can be a 1099, you can be a W-2. These are questions we get asked. There are questions about what the split is and whether you can change from lender paid to borrower paid. And these are all very, very good questions, and they can be answered in, I think, in a number of different ways. So to be systematic, I think the biggest question we get and where you have a lot of concern is this question about basis points, and whether basis points are basis points of the loan or basis points of the revenue. So just looking at it from the perspective of the actual rule and where we are in regulatory enforcement. So the rule says you can't pay anybody a commission incentive on anything that's a proxy for the loan terms. So we all know what that means. And this is, points, fees, how much you get on the loan can't be a proxy. So what can be a proxy? So if I was just going to say, you're going to take the simplest possible approach, what is the simplest way of structuring a compensation plan? And you would structure it on the basis of loan amount. Okay. And you would fix your compensation plan based on a percentage of the loan amount. And you, as the broker owner, remember that you as a broker owner aren't subject to the LO comp rules. You're, as a broker owner or a banker owner, you're being paid on the profitability of the company, not on any single particular loan term, right? So you, in a way, are exempt from MLO compensation plan requirements. You'll still see states asking for single sole proprietor broker owners to provide a compensation plan. And so whether you pay yourself a salary, whether you pay yourself a commission on each individual loan, and then at the end of the year or at the end of the quarter, figure out the profitability and tap off there. Those are things that don't really apply to what the question being asked is.
Right.
So you're not, if you're a broker owner, you're not tied in with to a single loan compensation scheme.
What?
That said, you've got two different types of broker company compensation. One is lender paid, right? So you can have the lender paid comp. John, I'm sorry, I didn't mean to interrupt you. Were you going to interject something?
No, I was just going to, right, maybe where you're getting today. So one question that I get sometimes, right, I think that most people kind of grasp the concept of lender paid, borrower paid to a certain extent. How they use it, I'm not necessarily sure if that's always accurate, right? Because if you go through, and I've seen a bunch where they audit enough files, and lo and behold, their person that falls under this bucket always pays 1.25%, and person that falls under this demographic always pays more. Right. You can get into some things there. If they charge purple elephant more than they charge white, giraffe, well, there's some thing there. The one question that I do get regarding this is, hey, John, is it okay if I set my comp with this lender at 2.5, and I'm going to run my hard FHAs through them, and I'm going to set my comp with this lender at 1.5, and I'm going to run my easy loans through them? What are your thoughts on? And I just tell them, hey, if somebody was to get out there and find out that you're doing this, how would it look? What would they call you? But what are your thoughts on that? Setting different comp with different lenders to be able to handle different groups of people
right
in those buckets.
Well, so there are two ways in which, so when you're talking about setting your comp, remember that you as the company owner should be setting the compensation, not the originator. So if the originator is going out and looking at lenders' pricing sheets and setting the pricing on their own loans, and that's going to automatically raise some flags. So you need, and there are states, by the way, that are more focused on this, and the CFPB is now starting to focus on this a little bit more. So in the last 3 years, it's been sort of a Wild West. So I could say to you, hey, listen, that's wrong, this is wrong. But the truth is, if you're small, if you're in a state which is a low touch state like Florida or Colorado or some of the other, light regulatory touch states, are they even going to look or know? And the answer is Probably not. So it does depend a lot. The answer to that question, John, a lot of it depends on where are you doing business. Are you in Washington? Are you in North Carolina? Are you in some of these other states where they are looking at these things a little bit more closely? Michigan, so that's that's the first caveat. And this is exactly why people play Stump the Band, because you can't go black and white. If you want black and white, you have to set it black and white. And that's what I'm going to start with. And we can can we color outside the box here in this situation? Can we color outside the box here in that situation? And that's what you asked me, is a one-off question. If I have two different kinds of products, can I do this? And let's just color in the lines now. Okay. So the question, the base is that, can I, as a company, have different compensation plans with different lenders? Yes. Remembering that your company's compensation is not subject to the MLO comp rules. Okay. Your individual MLO's compensation is subject to the MLO comp rules. So what you pay them is what's being regulated, not what the company pays you. So whether it's borrower paid or lender paid, doesn't matter. What's the commission to the LO? Under what circumstances can that change? So if you're fully compliant, you have a flat compensation plan that's based on loan amounts only. Okay. And it doesn't matter what kind of loan it is. Now, it does, if you're doing reverse mortgages, for instance, HECMs are not subject to the LO comp rule, right? If you're doing anything that's not a forward mortgage isn't subject to the LO comp rule. So HELOCs, things like that, you can color outside the box on those. But flat compensation plans. So the way we normally see this work, and this is something that the regulators haven't quite figured out yet, but we've got this. Okay, I'm not so much that I'm trying to make more money on a transaction, but today what we're seeing is people are coming in saying, I want to be able to cut my price to be competitive, right? So I'm flipping from lender paid to borrower paid to reduce the overall price of the loan, and I'm going to reduce the commission I paid to the loan originator. Is that acceptable? And that's acceptable provided that's not standard practice. It's an exception. So you're the one, you as the broker owner or the mortgage company are making an exception to your current pricing, and it's in the borrower's best interest. And to John's point about the making sure we're not providing different terms to different groups of people, because that's a fair lending violation. So you have to track every one of those exceptions. So if that makes sense, you've got a flat comp plan that you can make exceptions to depending on the circumstances. And so can you have, let's play devil's advocate here. It's like, well, I've got one office and all they do is inbound leads, right? And I've got another office that's all self-directed. On the inbound leads, because I'm paying for those leads, right? I'm only paying those loan officers 25 basis points on the loan, right? On the self-generated, though, I'm paying them 50 basis points because they got to go out and do all the work themselves. Is that acceptable? Well, it's a different office. It's a different compensation plan. What's the risk? The risk is that these guys, loan officers being loan officers, I was one myself, figuring out how to make more money, how to cut my price. Like, okay, I'm going to give you this deal. I'm going to say it was company generated so we can cut the price to the borrower, cut the commission, or flip it over. A company, an inbound lead guy who's only going to make a quarter point on a deal, flips it over to a retail guy in a different branch where he can make a half a point, make more money. So these are things, once again, can you do it? Sure. But you have to have controls in place to show that somebody's not just doing, bringing in somebody else, lowballing them on the rate and price, getting them in the door and jamming them into a product where they get more money. Okay.
Yeah.
So that's the trick. And like I said, the cleanest way around that is to make sure that you as the company owner are distributing pricing. It's a conforming loan. Here's your price today. You can go out and you'll make your full commission. If you need to change that price, come back to me and we will talk about it. But once again, keep a record of that. Make sure we're not, to the wealthy suburbs, only giving price breaks. To the inner cities, only giving full screen, right? So there is, I think, more to the point. What people ask me more about is I get calls every day for people who are asking, I'm trying to put together a comp plan for my and an employment agreement, and they're confabulating those two things. So a comp plan is the amount of commission I'm going to give you. An employment agreement is the document that says, this is your job as a loan officer. If you want to earn your compensation, you have to do these things. And that, and if you leave the company, we will pay your commissions on these loans for X number of days. And that's the document that most regulators are asking for, is the employment agreement, the loan originator MLO employment agreement. Why are they asking for it? They don't want to get involved in arbitrating between a company and an MLO, right? They want to see that you've got an agreement and you're going to live by the terms of that agreement. So have that, and then as an addendum, the compensation plan. So not confabulating those two things. So you have an employment agreement, it's negotiated one time. This is what you have to do, and then addendum A is the compensation amount, which is subject to change without notice at any time.
Yeah, no,
Does that make sense?
That's a great point. And I think that, right, these conversations get into, right, there's lots of nuance. If you're a broker, right, like, how do you do things? And then as you start onboarding people, how do you do things? And Rocket Mortgage probably does it a lot different than you're going to do it as a person hiring your first person that comes on. So some things that I like to just kind of tell people here, whether something's legal or not, there's what's legal and then what's right. And often there's a massive disconnect between those two. What I like to advise people on your conventional mortgages, when you sign your wholesale agreement, if you want to make 2.25, make 2.25 across all of the agreements, whether it be with Plaza, with United Wholesale, just set it the same. There is nothing arbitrary there to say one person gets something else, because the goal of starting a business is to stay in business. And let me tell you, if an audit comes back and finds out that you gave, Hispanic females significant, like you charged all of them 50 single mother Hispanic females, 50 basis points more on average than you did, Jimmy, the white guy buying his second home. And that's your whole business is set up that way. It doesn't take long until you're out of business. So your goal in starting a business is to stay in business. And you can never go wrong doing the right thing. And I will say that over and over and over. And and Thomas has got some great things there. And if you do get into like scaling and adding people, lots of things to happen there. Just comp is crazy. 1099 versus W-2. You're going to hear 1,000 different answers. Some states have things. Just before you go down those paths, just educate yourself so you really know kind of what you're getting into. And if you sign up with someone like Mortgage Manuals, Thomas has a very affordable package. There's some places out there that charge you, $250 a month just to have them ride along, and they add very little value. I actually think that Thomas undercuts his prices. He's like, hey, they're in Florida. They don't need that much. Like, they don't need to pay the reoccurring thing. When they get a problem, just call me. So it's crazy, but he's got some really cool packages. So if you are in that boat, he's got some stuff there for you. So
what I was going to say, John, that is compensation. It is one of those, and I love the allegory of playing stump the band. Call around until you get it. And I had this happen, where a customer of mine was, we were talking about a state that had stipulated that loan originators for a banking license must be W-2 employees, and he just kept calling and calling and calling different people. And finally, one day he got somebody to call him back and said, they don't have to be W-2 employees. No circumstances around that, right? 1099 versus W-2 employee doesn't really talk about commission rate, but the point is that if you call around, you're going to get a lot of different information. And to John's point, you know, it's also can be extremely complex. You're trying to get business. You want to keep your process as simple as possible. Try and remember what you told one person, told another. The more complex you make it, the more likely you're going to make a mistake and leave something out. And I just wanted to show you just real quick. I'm going to share really quickly, John, and then I'll come right back.
Yep.
So within our products, we do provide you with templated materials, and one of them is a sample compensation plan selection. So rather than something really ambiguous and bold, we just say, look, if you're a consumer paid model, this is what you're going to make. This is your role, this is your percentage. If you're going to have overrides. So a one-page simple thing that you can attach to your employment agreement to determine and memorialize what the plan is. And of course, that's subject to change. So the other element I just wanted to show is that, yes, we do, to your point, John, we do have a lot of free resources here. I just wanted to point a couple of those things out before we lose too many people to the time. That you had mentioned the loan originator compensation, and we do have a free loan originator agreement here. This is not a compensation plan. This is we call it a plan because we're not a law firm, so we can't draft legal agreements for you. So here's a plan, but what we've basically shown is this is what we're trying to say, is that who you are, what you're supposed to do, changes, anything that you have, and you can see here that the schedule, commission schedule, is an attachment. It's not part of the agreement. It's just attached and it's subject to change without notice. So this is the kind of thing you can come to the website, go under the loan originator comp, and download this for yourself. It's free to use for anybody. It is a sample. It is a draft. So if you have any questions about a legal nature about a contract, you should contact an attorney, and we do say that through that. And I just also wanted to point out we do have our knowledge base under services. You can go to knowledge base, and any questions like this, compensation, you can come and search there and get some resources there. We've tried to make it as simple as possible so that we're not having lots of different really deep things, but quick answers to common questions. So also,
and this is just and something that I see more and more with like ChatGPT. People believe that they can just go in. So this is just to anybody watching, going to ChatGPT and saying, you know, write me a loan officer compensation agreement. It will come up with something, and it's probably like a good starting point, but by no means like, is that the end all be all? Like there's a lot of really cool resources there. Go and check it out, right? It doesn't hurt to get a second and third opinion. Just a bunch of really great resources. And we've got about 15 minutes left. So if there's anything that, like, if you've got a question or anybody has something, let us know. We're happy to do that. And then another thing that I'm seeing more and more of, and I really push for individual bankers going out and like marketing their own personal brand, going out, doing social media, those kind of things. Any really big things that you're seeing out there, just advertising, just no-nos that people are missing. I know I see websites where people they go to GoDaddy. It's easy to get a website. They get bombarded by GoDaddy web programmers. And then I look at their website and they have no backlinks to consumer access. They're not an equal opportunity employer, lender, or even anything. Right. There's just a mess. So any big things that people miss, and I know you review websites all the time. So what are like kind of some of the things you miss there quickly?
I think, well, first of all, it is advertising. So a lot of people say, I don't advertise. I said, you have a website? What? Yes, we have a website. And so it's really important that that website is accurate. And that is the bulk of what we do when we look at advertising at websites, is to make sure that the information reflects the company information. Make sure if it's an individual loan originator and it's a social media site, that both the company information, NMLS, and the company information are on there. So we see there are a few areas where I always see a problem with websites. When somebody says, I've got the best service, I've got the best rates, or I've got the fastest service, is that a fact?
I have the best service. It's
I-
fact. I believe that 100%. So
Well, you
that
believe that
is
when
fact.
is it a fact though? Is it?
It
It's
is.
not. It's a claim. And so one of the most common errors we're seeing right now is people who are making statements which are marketing claims, but if you say it like that, you have to be able to back it up. So say, for instance, you do have the fastest service. You better have a survey, some documented evidence that says, according to the MLS or the deed of recorders in our marketplace, from application to closing was 17 days for us, and the average was 38. That's a fact. Okay. Yeah. Now, a fact is we have average 17 days to closing. That's fast, right? But stating we are the fastest service is a claim, and that's something that will attract a regulator's attention. Other things like best rates or rates in general, by the way, are posting rates on a website is something that's going to attract a regulator's attention. So even if it's an embed from Quicken or a bank rate, be careful about that. I would stay away from it because it tends to represent that these are your rates today, and then if they aren't, if they don't match up with the kind of rates and programs you're offering, that can be a finding for a regulator. So other common claims are we see problems with advertising, like on a refinance, not that we're dealing with a ton of refinances now, but we see this happening all the time, is make no payments for 3 months, right? Because of the trick between the date of the old loan being paid off and the first payment date on the new loan, you're actually not making a payment. Well, you are. You're making a payment on the payoff of the old loan and the interim interest on the new loan. So the claim is that you're not making any payments for 3 months. That indicates that, hey, I got 3 free months of mortgage. It's not true. So we all understand that. So carefully wording that sort of thing. If you're dealing with a VA streamline or any streamline refinance, no closing costs, that they are that you understand that there are costs, but that they're financed into the loan. So those are the kinds of things. On a reverse mortgage, no payments, right? Well, that's not true. You do have to make real estate and insurance payments on your reverse mortgage. And so people have lost their home because they thought I didn't have to make tax payments on it because you said no payments, right? And so these are the kinds of things that are really blatant. The rest are finer details, like you have a link to your to Yelp reviews on your website, and this is happening in a couple of states now where because the need to sort of generate social proof from reviews from previous customers, that they are going to actually check and see if there was such a person and they left such a review. And the fake reviews are something that's coming under great scrutiny in the mortgage business because it's something that's black and white. Did you really have this? You have 15 reviews, flowery reviews on your website, but you've only closed 10 loans. Wait a second, So be careful of these sorts of things. And finally, the last thing, of course, social media monitoring. You can do some simple social media monitoring, setting up Google alerts for your employees. And anytime something pops up on the website, you can see maybe they're doing some marketing that hasn't been approved by the company. You want to review that and making sure that all of the social media that is available has been claimed and reviewed by you. So we see a lot of findings where you've got a Yelp or a Google business or one of these sort of second tier business websites where they're harvesting information and selling it, as a directory type of service, and it doesn't have an NMLS ID or a company name correct or phone number or the right address, and that's a citation. So those kinds of things are the kinds of things we see most often. And once again, I'll just share quickly, I'm going to pull up, we do have an advertising checklist, part of our part of our compliance pack for brokers and non-deal correspondents and lenders. That advertising compliance checklist can be a great tool for you to go through and see, do I have anything that might cause a regulator to go, I'm actually not going to pull it up because it's just we have that tool for you. If that's something you'd like to request as a consideration for joining us in today's webinar, I'd be happy to make that available for you to free as well.
Yeah. Excuse me. We'll backlink to some of these things in our ending, right? We'll get it all up on there so people can access these things. One thing, just again, with social media, your job as a broker is to be in business and stay in business. So always look at it from that lens, right? Like your number one priority is to be in business, to stay in business. So just CYA, right? Cover your, if I was doing a mailer to 10,000 people, one thing that I would include on that mailer is that someone other than myself looked at it and said it's okay. So when I do get in trouble, I can put my hand up and say, well, I had, Thomas looked at it from mortgage manuals. They may say he was wrong. Well, okay, I tried. I understand. You may get slapped on the wrist, then a fine.
He was wrong?
Or, say I looked at it, right? Like, don't do that. But
right.
Just always be thinking about your main objective when you start a business is that business is something you're handing down to your kids in 20 years. And there's no violations on the NMLS, like the brand you're building, intentionally or unintentionally, every action you take is building a brand. So build the best brand that you can. So we're kind of wrapping it up here. A couple of things that I would just like to add. So I'll put a bunch of links in our system as to where you can go. Thomas has got some really cool programs, very affordable. If you're a broker owner, somebody that's looking at becoming a broker owner, he's got a little package there. He does some other really cool things, like puts together your package for comergence. You may or may not know what that is. It's this website that a lot of places use when you sign up as a wholesaler. He handles that. So he does a lot of very granular things for you that it takes time to figure out. So a well of just knowledge, a great resource there. If you have questions for me, I've helped multiple brokers do this across different states, all kinds of things. I know enough to know that I'm not the expert in everything, so I do find people to do that. If anybody's listening and they need help doing what I'm doing as far as coaching, teaching people, my brother Josh is on here. I've known him for like 38 or 39 years. I don't know how old he is. I'm the oldest of 7, so you just forget how old people are. But if you do need help with anything, if you're trying to create a business, join insurance, it doesn't matter. He runs a phenomenal program, right? So I'm smart enough to know I can't figure that out without him. I would be still like, I use an Android phone. So like, you'll know where I would be.
Here you go. Just for fun.
So
just for fun.
Yeah, that's a good one.
Yeah.
So if you have any questions, if you're out starting and trying to start a business, any of the stuff that we're talking about resonates with you, marketing, social media, making sure that you've got your poop in a group from a compliance standpoint, whatever it may be, I'd love to hear from you. There's places you can schedule appointments, join our circles group. We're creating a community where we can come together, share ideas, and do some different things. And then the last thing that I just ask, if you get any value from our stuff, help us spread the word, right? I want to help bankers become better. And as bankers become better, it puts them in a position where they're not working and giving all their money to someone else, and they're in a position to open their own brokerage. And once they open their own brokerage, I'd love to help them do better and make more. This pie is not finite, right? There's a lot of pieces to go around. And, right, we're all in the same game together. I love when the Rocket UWM fight happens. It's like they're both on the same team. It's like Hulk Hogan and Andre the Giant. They get out there on the stage for WrestleMania 5, and you can go and find the characters and like assign who they are. Like maybe I'm Hacksaw Jim Duggan. I've got my 2x4 and, but we're all fighting for the same thing, right? It's brokers doing more business, staying in business, and providing a great value and service to the clients. So anything you can do to help us, I'd love to hear from you. And we appreciate you being here. Josh, you got anything to add outside of showing weird pictures of me with a mullet? which I like. I appreciate that.
Hey, those mullets are coming back, so
Yeah, no.
that's kind of cool.
Morgan-
It's like who you were in 1985 or 1990 is actually in style again, so that's really cool.
87% of my high school dressed exactly like Morgan Wallen.
Yeah, it's
Yeah, I
great.
mean, like that's how we rocked it.
But aside from that, no, I don't have a whole lot to add aside from the fact that I just shared a link in the chat here, and we'll actually, depending on where you're watching this, it'll be in some of the show notes or comments to actually join the LO Foxhole, where you'll get notified every single week about these events, the trainings that we're putting on, and all the cool stuff that we're building. We're building a lot of really amazing tools for loan officers, including what all of our guests create, and pretty much putting together a library for loan officers or for bankers to become better, like John said at the beginning, and for bankers to become brokers. So at the end of the day, we'd love to build a tool for you if there's something that you think that we would need. And the other thing that I would also ask is if you know anybody who would be a great guest on this show, we'd also love to talk to them.
Awesome. Well, Thomas, truly appreciate your time. Josh, what you do, everybody out there, right? Let's all make more in 2024. And yeah, right, that my goal, one of my goals is to raise, right, in any industry, 50% of the people fall below average and 50% are above. I want to make sure that we raise that bar, right? I want average to be higher. And if there are people aren't executing out there, right, let's go and take their market share. Bar is set pretty low these days. So let's go out and take some people's market share. Let's eat their lunch. That's it. Have a great day.
Thanks for having me, John.
Yeah, you're welcome. Thank you all.
Take care.